Yeah, I think from a consumer perspective, this transition might look kind of subtle, but it's actually pretty massive for the business models of everybody in the ecosystem. For Comcast, it allows them to better serve their customers, drive the internet product, which drives their cash flows, hold on to that customer relationship, maybe even dampen down their content costs because now you and I are bringing the content ourselves and paying for it ourselves. For the media companies who depend on fees from their cable company, this creates some risk because now they're competing with services that the consumer is bringing themselves in the marketplace. And I think as an aggregator of apps, the Comcasts and Spectrums of the world have a real role. One of the results of our survey, part one, from a few weeks ago here at Morgan Stanley was that consumers really struggle to figure out what to watch.
Yes.
In fact, the number one driver of how people find, according to our survey, find what to watch is word of mouth. So for all the money being spent on marketing and algorithms, recommendations from your friends and family is the biggest driver, which just shows if somebody like a Comcast or any other service provider can create a product that elegantly helps us find compelling content, there's value in the market for that.
Absolutely. Also in here, I thought it was interesting that, can I call them losers? Is that what's happening? Or you tell me what the nuance is. The traditional premium networks like HBO, Showtime, and Starz, even HBO you saw is down a couple million subscribers. Is that right?
Yeah, the HBO situation's a little unique because they've lost carriage with Dish last year, so that's been a cause of pressure. I think if you were to move that, they've been growing. The so-called premium networks, Showtime, Starz, and HBO have, broadly speaking, been growing year on year. OTT subs replacing, flat to down kind of traditionally distributed customers. But what you see in the survey is that consumers are increasingly viewing the best original programming as coming from the Netflixes of the world. And that may be a function of just Netflix spending a lot more money than those other services. And as they scale, that gap has actually been widening.
Got it. But you're saying that the premium networks are actually, they're hanging in there because people want the good original content. So they're more likely to stick with that than with traditional cable. Final point on this is, what are you seeing with Hulu, where the viewer skews a little bit younger? I take it they see that as a good thing. A third of Hulu users said they didn't have traditional pay TV service. What's it all mean for Disney?
Yeah, I mean, one of the interesting things about Hulu, which is despite being historically owned by media companies, has potentially been a bigger driver of cord cutting than Netflix has been, which is usually held out as the boogeyman. And part of that's to do with Hulu having very valuable in-season TV rights. So you can watch shows like This Is Us right after it's been on NBC on Hulu the next day. And so that's created a really powerful product in the marketplace. I think the good news for Disney and also its partner Comcast in that service is that has scaled now to nearly 30 million subscribers. And so that has reached a level of size where it matters in the marketplace. And for Disney, who wants to now build Disney Plus, that gives them a really attractive launch pad for Disney Plus in the U.S. market.